Hello and welcome. If you're listening to this, chances are you're getting ready to face one of the most certain, and often most stressful, parts of American adult life: tax season. The good news is that the days of needing a mountain of paper forms, a calculator, and endless patience are largely behind us. Tax preparation software has revolutionized the way we file, making the process faster, more accurate, and far less intimidating. But with so many options on the market, a new challenge has emerged. How do you choose the right one? That's exactly what we're here to figure out together over the next 15 chapters. We'll break down everything you need to know to select the perfect software for your specific financial life, helping you file with confidence, maximize your potential refund, and minimize your stress. Before we dive in, it is absolutely essential to state the following. This content is for informational and educational purposes only. I am not a certified financial advisor, accountant, or tax attorney. The information provided here is not intended as, and should not be construed as, financial, investment, or tax advice. Tax laws are complex and change regularly. You should always consult with a qualified and licensed professional for advice tailored to your individual circumstances. Our goal is to empower you to ask the right questions and understand your options, not to provide specific recommendations or instructions. By proceeding, you acknowledge that you are responsible for your own financial decisions. With that important understanding in place, let's begin Chapter 1. The foundation: understanding your personal tax situation. You can't choose the right tool until you know the size and shape of the job ahead of you. Think of it like this. You wouldn't use a sledgehammer to hang a picture frame, and you wouldn't use a tiny tack hammer to break up concrete. Tax software is the same. The key to making the right choice isn't just about the software's features. It's about how those features align with your life. The single biggest mistake people make is either overpaying for a powerful program they don't need, or choosing a free or basic version that can't handle their tax situation, leading to missed deductions and costly errors. So for the rest of this chapter, we're going to put the software aside and focus entirely on you. We'll walk through a simple self-assessment. Grab a notepad or open a document on your computer, and let's map out what your year looked like financially. We can generally break tax situations down into 3 broad categories: simple, moderately complex, and advanced. First, let's look at the simple tax situation. Does this sound like you? You have 1 or maybe 2 jobs where you are a traditional employee. At the end of the year, your employer gives you a Form W-2. You don't have any other significant sources of income. You don't own a home, so you won't be deducting mortgage interest. You don't have a side hustle. You didn't sell any stocks, and you don't have a complex investment portfolio. Your charitable donations are minimal, and your medical expenses don't exceed the threshold for deduction. If this description fits you, you will likely be taking the standard deduction. The standard deduction is a fixed dollar amount, determined by Congress, that you can subtract from your adjusted gross income to reduce your taxable income. For filers in the simple category, this is almost always the best and easiest path. Your primary tax forms are the 1040 and the information from your W-2. You might also have a form for student loan interest paid, which is a common and straightforward deduction. If this is your profile, you are in a great position. You will likely qualify for the free or very low-cost versions of most major tax software. Your primary need is a platform that can accurately import your W-2 data and guide you through a few simple questions to ensure you haven't missed anything. Your goal is speed, accuracy, and a low cost. Next, let's move to the moderately complex tax situation. This is where a large number of American taxpayers fall. You might start with a W-2 from your main job, but other elements are in the mix. For example, did you buy a home? If so, you are now an itemizer. This means instead of taking the standard deduction, you will list out or itemize all your individual deductions to see if they add up to more than the standard amount. The big ones here are mortgage interest found on Form 1098, state and local taxes, often called SALT, and significant charitable contributions. Maybe you have children. This introduces credits like the Child Tax Credit and the Child and Dependent Care Credit. Do you have investments? Perhaps you sold some stock or mutual funds this year. If so, you'll receive a Form 1099-B, and you'll need to report capital gains or losses. Did you receive unemployment benefits for a period? That's taxable income reported on a 1099-G. Did you contribute to an IRA or a health savings account, also known as an HSA? These have their own deductions and forms. If you find yourself nodding along to these scenarios, homeownership, kids, some investing, maybe some student loan interest, you've moved beyond the simple category. You need software that specifically supports itemized deductions, investment income, and various tax credits. The free versions of software often won't cut it here. You'll be looking at the deluxe or premier tiers. These paid versions have the built-in forms and interview questions necessary to handle these situations, ensuring you don't miss out on valuable deductions and credits that could significantly impact your refund or the amount you owe. Finally, we have the advanced tax situation. This category applies to anyone whose income isn't primarily from a W-2. Are you a freelancer, an independent contractor, or a gig worker for platforms like Uber, DoorDash, or Upwork? If so, you are self-employed. You won't get a W-2. Instead, you'll receive Form 1099 NEC, or 1099K. This changes everything. You are essentially a small business owner. You need to report your gross income, but you also get to deduct your business expenses. This could include a portion of your home office, your vehicle mileage, software subscriptions, supplies, and much more. You're also responsible for paying self-employment tax, which covers Social Security and Medicare. Another sign of an advanced situation is significant investment activity. This goes beyond selling a few shares of stock. It includes things like cryptocurrency trading, rental property income, or being a partner in a small business that provides a K-1 form. Each of these requires specific forms and a deep understanding of the rules. Did you sell a home? That has its own tax implications. If you fall into this advanced category, you need the most robust software available, typically labeled self-employed or home and business. These versions are designed to handle Schedule C for business profit or loss, Schedule E for rental income, and have dedicated sections for tracking expenses and calculating complex deductions. They also provide guidance on things like quarterly estimated tax payments, which are crucial for self-employed individuals to avoid penalties. Using a basic software version for an advanced tax situation is a recipe for disaster. It will lack the necessary forms and guidance, likely resulting in an inaccurate return and a high risk of being audited by the IRS. So take a moment now. Look back at your year. Were you a W-2 employee with a standard deduction? Are you a homeowner with kids and some investments? Or are you a business owner, a landlord, or a serious investor? Be honest about where you fall. Understanding your complexity level is the most critical first step. It narrows down your choices from dozens to just a few. It's the foundation upon which we'll build in the coming chapters. To summarize, before you even look at a single software brand, you must first diagnose your own tax health. Are you simple, moderately complex, or advanced? Once you have a clear answer to that question, you are ready to move on. Welcome back. In our first chapter, we laid the essential groundwork for a less stressful tax season by focusing on the most important variable, you. By honestly assessing whether your financial life fits into a simple, moderately complex, or advanced tax situation, you've already taken the most crucial step toward choosing the right tax preparation software. Now, with that self-assessment in mind, we can tackle the very first decision you'll face when you start looking at software options. Should you use a free version, or is it worth it to pay for a premium product? The market is flooded with offers for free filing, but as with most things, the details matter. In this chapter, we'll demystify the world of free tax software and help you identify the precise tipping point where investing in a paid version becomes the smarter financial choice. First, let's repeat our essential disclaimer for this chapter. This content is for informational and educational purposes only and should not be considered financial, legal, or tax advice. The tax code is incredibly complex, and your personal situation is unique. Always consult with a qualified, licensed professional before making any tax-related decisions. Our aim here is to help you understand the landscape of available tools, not to advise you on how to file your taxes. So let's talk about free. What does it actually mean in the context of tax software? Generally, there are two types of free filing options available to taxpayers in the United States. The first is the IRS Free File Program. This is a public-private partnership between the Internal Revenue Service and several commercial tax software companies. If your adjusted gross income, or AGI, is below a certain threshold, which changes each year, you can use guided software from one of these partner companies to prepare and file your federal tax return for free. It's a fantastic program designed to ensure that taxpayers with lower to moderate incomes have access to quality tax prep services without the cost. However, it's important to know that you typically have to start the process from the IRS website to ensure you get the genuinely free version promised by the partnership. The second and more widely advertised type of free software is the commercial freemium model. These are the free editions, offered by the major brands you see advertised everywhere. Their business strategy is straightforward. Attract a large number of users with the promise of free filing for simple returns, and then upsell them to a paid tier if their tax situation requires forms or features not included in the free version. There is absolutely nothing wrong with this model, but it's why understanding your own tax situation from Chapter 1 is so critical. So when is a free option, either from IRS Free File or a commercial provider, the right choice? The answer is clear: when you have a genuinely simple tax return. Let's revisit that definition. A simple return generally means you are taking the standard deduction rather than itemizing. Your income comes exclusively from a Form W-2. You don't have freelance income, business expenses, stock sales, or rental properties. You might claim a deduction for student loan interest or some basic educational credits, as most free versions support these common situations. If you can confidently say, "My tax situation is simple," then you are the ideal candidate for a free software solution. You can file with confidence, save money, and get the job done efficiently. The software will guide you through entering your W-2 information, ask some basic questions, and help you file your federal return electronically at no cost. For millions of Americans, this is all they need. But where is the line? What is the tipping point where paying for software is no longer just an option, but a necessity? The tipping point occurs the moment your tax situation requires a form or a calculation that the free versions don't support. Here is a simple checklist of common triggers that will almost certainly require you to upgrade to a paid software tier. You need to itemize deductions. If the sum of your deductible expenses is greater than the standard deduction, you should itemize. The most common itemized deductions are home mortgage interest, state and local taxes, which are capped, and large charitable donations. Free versions are built around the standard deduction and typically do not include the necessary Schedule A to itemize. You sold investments. If you sold stocks, bonds, mutual funds, or cryptocurrency, you must report those capital gains or losses on Schedule D. This is considered a more complex tax situation, and free software will direct you to a paid Premier or Investor tier to handle it. You are a freelancer, contractor, or have a side hustle. Any income that didn't come from a W-2 is considered self-employment or business income. To report this and deduct your associated business expenses, like mileage, home office costs, or supplies, you need a Schedule C. This automatically moves you into the self-employed or home and business tiers, which are the most comprehensive and expensive. You have rental income. If you own and rent out a property, you need to report that income and its related expenses on a Schedule E. This is another feature reserved exclusively for paid versions. You contributed to or took a distribution from a health savings account, HSA. While very common, Form 8889 for HSAs is often not supported in the most basic free versions and may require an upgrade. If any of these 5 points apply to you, you should expect to pay for your tax software. Trying to work around it by using a free version will either be impossible, because the forms aren't available, or it will lead you to file an incomplete and inaccurate return, which could result in penalties and a notice from the IRS down the road. So, what are you actually getting when you pay? You're paying for capability and guidance. The paid tiers, often named things like Deluxe, Premier, and Self-Employed, don't just unlock more forms. They provide a deeper level of service. A deluxe version is typically for itemizers. It will have a robust section to help you enter your mortgage interest and property taxes, and will help you determine if itemizing is actually better for you than taking the standard deduction. A Premier version includes everything in Deluxe but adds comprehensive support for investments. It can often import data directly from your brokerage, which saves a massive amount of time and prevents data entry errors, and it will handle the complex calculations for capital gains. A self-employed version is the all-inclusive package. It has everything from the other tiers plus a dedicated module for business income and expenses. These versions often include specialized guidance for your industry and tools to help you find every possible business deduction you're entitled to. In the end, the cost of tax software should be viewed as an investment in accuracy and peace of mind. For a simple return, paying is an unnecessary expense. But for anyone with even moderate complexity, paying a fee, whether it's $50 or over $100, for the right software can save you far more than that by uncovering deductions and credits you might have missed, and by ensuring your return is filed correctly, keeping you out of trouble with the IRS. To summarize, the choice between free and paid is a direct consequence of the self-assessment you did in Chapter 1. A simple tax life means you can enjoy the benefits of free filing. A more complex financial year means you need to budget for a paid software product that has the specific tools you need. Now that you can determine if you need to pay, Our next chapter will focus on what you should be looking for. We'll dive into the essential features to compare when you're looking at different software brands, covering topics like user interface, level of support, and audit defense. Thank you for listening. Welcome back. In our first 2 chapters, we identified your personal tax complexity and demystified the difference between free and paid software. You should now have a solid idea of what tier of software you're looking for. The next logical question is, which brand should you choose? While dozens of programs are available, the market is dominated by a few key players. In this chapter, we're going to provide a head-to-head overview of the most popular tax software brands in the United States. Our goal is to give you an unbiased look at what each one is known for, their strengths, their weaknesses, and the type of user they tend to serve best. And as always, we must begin with our important reminder. This content is for informational and educational purposes only. This overview is based on generally available information and common user feedback, and should not be taken as an endorsement or as financial advice. Software features and pricing change annually. You should always conduct your own research on the latest versions before making a purchase. The right choice is entirely dependent on your personal needs and preferences. The 3 brands we will focus on today are the most recognized names in the DIY tax space: TurboTax, H&R Block, and TaxAct. Let's look at each one. First up is TurboTax. Without a doubt, TurboTax is the most well-known and widely used tax software in America. Its biggest strength, and the reason for its popularity, is its user interface. It is often described as the most polished, user-friendly, and intuitive program on the market. TurboTax excels at taking the complex language of taxes and translating it into a simple, conversational, question-and-answer format. It feels less like you're filling out tax forms and more like you're having an interview with a very patient accountant. This makes TurboTax an excellent choice for first-time filers, or for those who feel anxious about the tax preparation process. The software provides extensive explanations for each step, and its clean design makes it easy to navigate. It's also known for its robust import capabilities, allowing you to automatically pull in W-2s and investment data from thousands of employers and financial institutions, which can be a huge time saver. The primary drawback of TurboTax is its price. It is consistently the most expensive option across all paid tiers. While its free version is suitable for simple returns, any level of complexity will quickly push you into their deluxe, premier, or self-employed products, which come at a premium cost. Critics sometimes point to its aggressive upselling, where users might feel nudged to upgrade or add on services throughout the filing process. So, to summarize TurboTax, think of it as the premium, user-friendly option. You pay more for a smooth hand-holding experience. It's best for users who prioritize ease of use and are willing to pay for that convenience. Next, let's discuss H&R Block. As a company with a long history of in-person tax preparation, H&R Block has successfully translated its brand recognition into a powerful digital offering. Their software is a direct competitor to TurboTax and is also very capable and well-designed. Many users find its interface to be nearly as good as TurboTax's, offering a similar interview-style process. H&R Block's key differentiator is its connection to its physical locations. This is a massive advantage for users who want the best of both worlds. You can start your return online, but if you get stuck or feel overwhelmed, you can get help from a human. You can pay extra for live online assistance from a tax pro, or you can even take your data to a local office to have them review or complete your return. This digital-to-physical bridge provides a safety net that purely online competitors can't match. In terms of pricing, H&R Block is typically slightly less expensive than TurboTax, making it a very compelling value proposition. It offers a full range of products that mirror TurboTax's tiers, handling everything from simple returns to complex self-employment and investment scenarios. Their audit support is also highly regarded, often including in-person representation, which can be very reassuring. The potential downside is that while the interface is good, some users still find TurboTax to be a bit more polished and seamless. To summarize H&R Block, think of it as the versatile hybrid option. It offers a strong online product at a competitive price, with the unique and valuable backup of in-person expert support. It's ideal for users who want a great digital experience, but value the peace of mind that comes with having human help available if needed. Finally, let's look at TaxAct. For many years, TaxAct has positioned itself as the value-focused alternative to the bigger two. Its primary selling point has always been price. TaxAct consistently offers its software at a lower cost than comparable tiers from TurboTax and H&R Block, often by a significant margin. If you are a confident filer who understands your tax situation and doesn't need a lot of hand-holding, TaxAct can be an excellent way to save money. The software is less flashy than its competitors. The interface is more direct and form-based, though it still provides a question-and-answer guide. It is a no-nonsense, functional tool that gets the job done efficiently. It supports a comprehensive set of tax forms and situations, including complex ones. The trade-off for the lower price is generally found in the user experience and the level of support. While perfectly functional, the interface is not as slick or conversational as TurboTax. The built-in explanations and guidance may not be as detailed, which could be a challenge for someone with a complex return who isn't sure what to do. While they do offer professional assistance, it is generally not as extensive as the offerings from H&R Block or TurboTax. Their audit support is also more limited. In summary, TaxAct is the budget-friendly powerhouse. It provides all the necessary functionality at a much lower price point. It's best for cost-conscious users who are comfortable with their tax situation and don't require an elaborate, guided experience. So there you have it. TurboTax, the user-friendly premium choice, H&R Block, the versatile hybrid with in-person support, and TaxAct, the powerful budget option. None of these is definitively the best. The right one is the one that best fits your needs, your confidence level, and your budget. In our next chapter, we'll go beyond the brands and dive deeper into the specific features you should be comparing, such as the quality of the user interface, the different levels of customer support, and the value of audit defense packages. Thank you for listening. Hello and welcome back. In our last chapter, we surveyed the landscape of the major tax software brands, getting a feel for their general reputations and the types of users they attract. But as with any major purchase, the brand name only tells part of the story. The real value is found in the specific features and tools that will make your life easier. In this chapter, we're going to move beyond the brand names and dissect the essential features you should be looking for. Think of this as your personal evaluation checklist. By the end of our time today, you'll know exactly what to look for to ensure a program is a good technical fit for you. As we begin, please remember our critical disclaimer. The information provided here is for educational purposes only and is not a substitute for professional tax, legal, or financial advice. Features and guarantees can change, so always verify the specifics on the software provider's website. Our goal is to equip you to make an informed choice, not to recommend any specific product or feature. The first and most immediate feature you'll encounter is the user experience, often called the UX. This is all about how the software looks, feels, and guides you through the process. Most modern software uses a conversational, interview-style format. It will ask you simple questions in plain English, like, did you buy a home last year? Or did you have any children who lived with you? And then it will put your answers onto the correct tax forms behind the scenes. Brands like TurboTax are famous for perfecting this polished, hand-holding approach, which is fantastic for beginners or anyone who feels intimidated by taxes. Other programs, particularly value-focused brands, might have a more direct, no-nonsense interface. It might feel a little closer to the actual tax forms. This can be faster and more efficient for experienced filers who already know what information they need to provide and don't need the extra conversational layer. There is no right or wrong answer here. It's about your personal preference. Do you want a guide or do you want a straightforward tool? Many services offer free versions or trials, so it's always a good idea to start one just to see if you like the way it feels before you commit. The second crucial feature is data import capabilities. This is a massive time saver and accuracy booster. Many employers and financial institutions partner with tax software companies to allow you to import your tax forms electronically. The most common is importing your W-2. Instead of typing in all the boxes from your form, you can simply enter your employer's ID number and some personal information, and the software will pull in all the data automatically. This becomes even more valuable for moderately complex and advanced returns. If you have a savings account, you can import your 1,099 INT for interest income. If you have investments, this is a game changer. Manually entering dozens or even hundreds of stock transactions from a Form 1099 is tedious and prone to error. A premier or investor tier of software that can import this data directly from your brokerage firm can save you hours of work, and is often worth the price of the upgrade for this feature alone. Before you buy, check which institutions the software can import from to make sure yours are on the list. Next, let's talk about support and expert help. What happens when you get stuck? The level of help available varies dramatically between free and paid products. Free versions typically offer a searchable online knowledge base of articles, and perhaps a user forum. If you upgrade to a paid version, You usually get access to live customer support via chat or phone, but this is often limited to technical problems with the software itself, not tax questions. For actual tax advice, you'll need to look for tax expert help, which is almost always a paid add-on. This service connects you with a credentialed professional, like a CPA or an enrolled agent, who can answer your specific questions about a deduction or credit. Some companies even offer a review service, where a tax pro will look over your entire return before you file it, giving you an extra layer of confidence. This hybrid approach, combining DIY software with on-demand expert help, is becoming incredibly popular for those who want a professional's eye without paying for full-service preparation. Finally, consider the software's guarantees and audit support. Nearly all reputable companies offer two basic guarantees. The first is a 100% accuracy guarantee. This means that if their software makes a calculation error that results in you paying an IRS penalty or interest, they will reimburse you for those fees. It's important to understand this does not cover errors you make when entering your own data. The second is a maximum refund guarantee, which states that if you use their software and then find a larger refund or smaller tax liability with a competitor, they will refund the price you paid for their product. Where things really differ is with audit support. This term can mean several things. The basic level, often included for free, is simply audit guidance. If you get a letter from the IRS, they'll give you information and tell you what the letter means. The next step up is a paid service often called audit defense. For an upfront fee, you get access to a professional who will help you prepare your response and correspond with the IRS on your behalf. This provides significant peace of mind for those with complex returns who may be at a higher risk of being audited. Be sure to read the fine print to understand exactly what level of support is being offered. So, as you compare your options, look beyond the brand and the price tag. Ask yourself, how important is the user experience to me? Will this software import my specific investment data? What level of human support do I want as a backup? And how much is the peace of mind from audit defense worth? In our next chapter, we'll begin to apply this knowledge to specific scenarios. We'll start with one of the fastest growing groups of taxpayers, freelancers, gig workers, and the self-employed. Thank you for listening. Hello and welcome back. We've spent the last few chapters building a strong, general understanding of the tax software landscape. Now we're going to begin focusing that knowledge on specific, real-world situations. We'll start with one of the largest and fastest-growing segments of the American workforce: freelancers, independent contractors, gig workers, and self-employed business owners. If you earn income this way, your tax situation isn't just a little different from a traditional employee's. It's a completely different world. The challenges are greater, but so are the opportunities. In this chapter, we'll explore why specialized software isn't just a luxury for the self-employed. It's an absolute necessity. Before we dive in, we must restate our essential disclaimer for your protection. This content is for informational and educational purposes only. It is not tax, legal, or financial advice. The rules for business income and deductions are complex. You should always consult with a qualified, licensed tax professional to get advice tailored to your specific business and circumstances. Our goal is to help you understand the tools you'll need, not to tell you how to prepare your taxes. The first thing to understand is the fundamental shift that occurs when you become self-employed. When you work for an employer, they give you a W-2. When you work for yourself, your clients or the platforms you use will give you a Form 1099 NEC or a 1099-K. This isn't just a different form. It means you are now considered a business by the IRS. Even if you're just a single person working from your kitchen table, you are a sole proprietor. This means you must file a Schedule C, profit or loss from business, with your Form 1040. On this form, you report your gross income, and then you subtract your ordinary and necessary business expenses to arrive at your net profit. This net profit is the amount you actually pay tax on. And this is where the right software becomes your most valuable partner. Free and basic versions of tax software do not support Schedule C. You must use a self-employed or home and business tier. The most powerful feature of this specialized software is its ability to help you identify and track your business deductions. As a business, you can deduct the costs of running that business. Common examples include home office expenses, a portion of your internet and phone bills, software subscriptions, office supplies, business-related travel and meals, and professional development costs. The best tax software for the self-employed goes far beyond just filing at the end of the year. It acts as a year-round bookkeeping assistant. Top-tier programs often come with companion apps that allow you to track your income and expenses in real time. You can link your business bank accounts and credit cards, and the app will help you categorize transactions as business or personal.
Disclaimer: this video is for informational and educational purposes only and should not be considered professional legal, financial, or tax advice. I am not a certified public accountant, CPA, or a tax attorney. You should consult with a qualified professional for advice tailored to your individual situation. Tax laws are complex and subject to change. The creator of this video or the channel will not be held liable for any actions taken based on the information provided.
Many even allow you to take pictures of receipts with your phone and attach them to the corresponding expense. This year-round tracking is the single best habit a self-employed person can develop. It turns tax time from a frantic search for receipts into a simple review of data you've already organized. Another critical feature for many gig workers and freelancers is mileage tracking. If you use your personal vehicle for business, whether it's driving to meet clients, picking up supplies, or for a delivery or rideshare service, you can deduct the cost of those miles. You have two ways to do this: the actual expense method or the standard mileage rate. The standard mileage rate is simpler and very common. The IRS sets a specific rate per mile, and you multiply that by your total business miles for the year. A deduction of several $1,000s is common, but you must have proof: a detailed log of your business trips, including dates, mileage, and purpose. The best self-employed software includes GPS-enabled mileage tracking in its mobile app, making this process nearly automatic. Finally, specialized software is essential for navigating two things you never have to think about as a W-2 employee: self-employment tax and quarterly estimated payments. Self-employment tax, filed on Schedule SE, is how you pay your share of Social Security and Medicare taxes. An employer would normally pay half, but as a business owner, you are responsible for both the employer and employee portions. This is a separate tax on top of your regular income tax. Good software calculates this for you automatically. Because no taxes are being withheld from your paychecks during the year, you are required to pay your estimated income and self-employment taxes in 4 quarterly installments using Form 1040-ES. This prevents you from having a massive, unmanageable tax bill in April and helps you avoid underpayment penalties from the IRS. This is perhaps the most daunting task for new freelancers. A self-employed software package is designed to solve this. Based on your income and expenses, it will calculate your estimated quarterly payments and provide you with the printable vouchers and due dates, taking the guesswork out of the entire process. In conclusion, for anyone who files a 1099, the choice is clear. You need the top-tier, self-employed version of a reputable tax software program. The investment pays for itself by maximizing your deductions, ensuring you are compliant with complex rules, and giving you the tools to manage your business finances with confidence throughout the entire year. In our next chapter, we will turn our attention to another group with unique tax needs: investors. We'll cover everything from simple stock sales to the complex world of cryptocurrency. Thank you for listening. Hello and welcome back. In our last chapter, we took a deep dive into the world of self-employment. Today, we turn our attention to the other major category of taxpayers with advanced needs: investors. Whether you're a casual stock trader, a long-term retirement investor, or you've ventured into the world of digital assets, you need to know that your investment activity has direct and significant tax consequences. In this chapter, we'll break down the essential software features that investors need to ensure accurate, compliant, and stress-free tax filing. As we are discussing investments and taxes, our disclaimer is more important than ever. This material has been prepared for informational and educational purposes only. It is not intended to provide and should not be relied on for tax, legal, or investment advice. The tax laws surrounding investments are incredibly complex and subject to change. Always consult with a qualified financial advisor and a licensed tax professional to discuss your personal investment and tax situation. When you sell an investment like a stock, bond, or mutual fund for more than you paid for it, you have a capital gain. If you sell it for less, you have a capital loss. Your brokerage firm will report all of your sales for the year on a Form 1099-B. Your tax software then uses this information to fill out Form 8949 and, ultimately, Schedule D, which is where your total capital gains and losses are calculated. For investors, the single most important software feature, and the primary reason you must upgrade to a Premier or Investor tier, is the ability to import your Form 1099-B directly from your brokerage. If you only have 1 or 2 stock sales, you could enter them manually. But if you have dozens or even hundreds of transactions, manual entry is not just a nightmare, it's a recipe for costly mistakes. A A single typo could lead to an incorrect tax calculation and a notice from the IRS. Premium tax software can connect directly to hundreds of financial institutions and import all of this transaction data in seconds, flawlessly. This feature alone is worth the entire cost of the software. Beyond importing, good software also helps you navigate complex rules. One example is the wash sale rule. In simple terms, this IRS rule prevents you from selling a security at a loss and then buying that same, or a substantially identical, security back within 30 days just to claim a tax deduction. If you trigger this rule, your loss is disallowed for the current year. Reputable tax software will automatically track and apply this rule, adjusting your cost basis correctly and keeping you in compliance without you having to become an expert on the details. Now let's address the new frontier of investing, cryptocurrency. This is where tax compliance becomes truly challenging. The IRS treats cryptocurrency not as currency, but as property, just like a stock. This means that every single time you dispose of a cryptocurrency, it is a taxable event. This includes selling it for US dollars, trading one crypto for another, say Bitcoin for Ethereum, or even using crypto to buy a product or service, like a cup of coffee. Each of these events creates a capital gain or loss. The problem is that unlike a stock brokerage, crypto exchanges and personal wallets often provide incomplete or poorly formatted transaction reports. If you trade on multiple exchanges, tracking your cost basis, what you originally paid for each coin, can become nearly impossible to do by hand. This leads to a reality that every serious crypto investor must understand. You will likely need a two-software solution. First, you need a specialized crypto tax aggregator service. These are dedicated online platforms that can connect to hundreds of exchanges and wallets via API. They pull in all your transaction data, sort through the chaos, calculate your gains and losses for every single trade, and generate a completed Form 8949. Once you have this report from your crypto tax service, you then move to Step 2, your main tax preparation software. The Premier tier you use for your stocks will have a section for you to upload the Form 8949 from your crypto service, or to enter the summary totals. The tax software itself typically cannot do the complex, transaction-by-transaction crypto calculations, but it provides the portal to report the final numbers correctly on your return. To summarize, for a traditional stock or fund investor, a premium software tier with 1099 import is essential. For a cryptocurrency investor, that same software is still needed, but it must be paired with a dedicated crypto tax service to do the heavy lifting first. The cost of these tools is minor compared to the risk of filing an inaccurate return. In our next chapter, we'll shift our focus from what you do for a living or how you invest, to how major life events can completely change your tax picture. We'll explore the tax implications of getting married, buying a home, and having a baby. Thank you for listening. Hello and welcome back. So far in our journey, we've explored the tax software landscape based on your profession and your investments. But life isn't static. Major personal milestones don't just change your life, they change your tax return. An event that brings you great personal joy can also introduce a new layer of financial complexity. In this chapter, we'll explore 3 of the most common life changes: getting married, buying a home, and welcoming a child, and discuss how each one impacts your taxes and the software you'll need to file them. As always, we must begin with our important disclaimer. This content is for educational purposes only and should not be considered legal, financial, or tax advice. Life events have unique and specific consequences for every individual. Always consult with a qualified professional to understand how these changes affect you personally. Our goal is to highlight the tax implications so you can be better prepared. Let's start with getting married. When you tie the knot, the IRS no longer sees you as 2 single individuals. Your marital status as of December 31st determines your status for the entire year. You now have a new choice of filing status: married filing jointly or married filing separately. For the vast majority of couples, filing jointly offers the most advantages, including higher income thresholds for tax brackets and eligibility for more credits and deductions. The primary software implication here is the need to combine 2 financial lives into one tax return. A good tax program makes this process seamless, but it immediately moves you beyond a simple return. The software will need to handle 2 W-2s, and potentially 2 sets of everything else: investment income, student loan interest, and so on. A key function of the software is to take all this combined data and determine if you fall into a more favorable tax bracket as a couple, which can often result in paying less tax than you did as 2 single individuals. Next, let's talk about buying a home. This is one of the most significant financial steps you can take, and it's a major complexity trigger for your taxes. As a renter, you almost certainly took the simple standard deduction. As a homeowner, you are introduced to the world of itemizing deductions on Schedule A. The two biggest tax deductions for new homeowners are mortgage interest and property taxes. Your lender will send you a Form 1098 showing the total mortgage interest you paid for the year, and this amount is generally deductible. Additionally, the property taxes you pay to your local government are also deductible, though this is part of the state and local tax, or SALT deduction, which is currently capped. Because of these powerful new deductions, your total itemized deductions will often be much larger than the standard deduction, resulting in a lower tax bill. However, you cannot access these benefits with a free or basic software version. Buying a home is the #1 reason people upgrade to a deluxe tier of software. These paid versions are specifically designed to support Schedule A and will guide you through entering your homeowner information to maximize your deductions. Finally, let's discuss welcoming a new child into your family. This is another joyful event that brings with it significant tax benefits in the form of tax credits. Remember, a deduction reduces your taxable income, but a credit is even better. It reduces your actual tax bill dollar for dollar. The most well-known benefit is the child tax credit. This is a substantial credit for each qualifying child under the age of 17. The software will walk you through the requirements, such as the child's age, relationship to you, and residency, to ensure you qualify. Another valuable credit is the Child and Dependent Care Credit. If you pay for childcare such as daycare or a babysitter, so that you and your spouse, if filing jointly, can work or look for work, you may be able to claim a credit for a percentage of those expenses. This can save you hundreds or even thousands of dollars. To claim these credits, you need software that asks the right questions and includes the necessary forms. A quality program will have dedicated sections for dependents and will automatically check your eligibility for these and other family-related benefits, like the Earned Income Tax Credit, ensuring you don't leave any money on the table. In summary, getting married, buying a home, and having a child are more than just life events. They are events that fundamentally change your tax profile. Each one adds a layer of complexity that requires you to move from the most basic software to a more capable, paid version that can handle joint filings, itemized deductions, and family tax credits. In our next chapter, we'll continue this theme by looking at how planning for the future through education and retirement savings affects your current year tax return. Thank you for listening. Hello and welcome back. In our last chapter, we saw how major life events like marriage and buying a home can change your tax situation overnight. Today, we're going to continue that theme by focusing on how you can benefit from planning for two of life's biggest financial goals: paying for higher education and saving for retirement. The U.S. tax code is specifically designed to encourage these activities by offering valuable deductions and credits. In this chapter, we will explore these incentives and explain why you need capable tax software to navigate the rules and take full advantage of them. Before we proceed, we must state our essential disclaimer. This content is for educational and informational purposes only and should not be considered tax or financial advice. The rules for education credits and retirement deductions are complex and have specific eligibility requirements. You should always consult with a qualified tax professional or financial advisor to make decisions about your education and retirement planning. Let's begin with paying for higher education. The costs can be staggering, but there are two primary tax credits designed to help: the American Opportunity Tax Credit and the Lifetime Learning Credit. Both are claimed using Form 8863. The American Opportunity Tax Credit, or AOTC, is the more powerful of the two. It's intended for students in their first 4 years of college or vocational school. It allows for a maximum annual credit of up to $2,500 per eligible student. What makes the AOTC especially valuable is that it's partially refundable. This means that even if you don't owe any tax, you can get some of the credit back as a refund. The Lifetime Learning Credit, or LLC, is broader. It's not limited to the first 4 years of college and can be used for undergraduate, graduate, and even professional courses you take to acquire new job skills. The LLC is non-refundable, meaning it can reduce your tax liability to zero, but you won't get any of it back as a refund. The maximum credit is lower, typically $2,000 per tax return, regardless of how many students are in the family. You cannot claim both credits for the same student in the same year. This is where good tax software is indispensable. Based on your answers to a series of interview questions about your income, your student's enrollment status, and your expenses, the software will automatically determine which credit you are eligible for, and which one will give you the bigger tax break. It takes the complex rules and decision-making off your plate. Now, let's shift our focus to saving for retirement. One of the most powerful tools available for individual retirement saving is the traditional IRA, or individual retirement arrangement. Its key feature is that your contributions may be tax deductible. Here's how it works. When you contribute money to a traditional IRA, you may be able to subtract that amount from your income for the year. This lowers your adjusted gross income, or AGI, which in turn lowers your tax bill. For example, if you contribute $5,000 and are in the 22% tax bracket, that deduction could save you $1,100 in taxes for the year. However, whether you can deduct your full contribution, a partial amount, or none at all depends on a couple of key factors. Your income and, most importantly, whether you are covered by a retirement plan at your workplace, like a 401k. If you are not covered by a workplace plan, you can generally deduct your full contribution. If you are covered, your ability to deduct is phased out as your income increases. These rules are complex and the income thresholds change regularly. This is another area where tax software is a huge asset. You simply tell the software how much you contributed to your traditional IRA. The program already knows your income from your W-2 and will ask if you were covered by a workplace retirement plan. With that information, it will instantly and accurately calculate the exact deduction you are legally allowed to take. It removes the risk of making a mistake and claiming a deduction you're not entitled to. In summary, planning for your future through education and retirement savings is rewarded by the tax code. But these rewards come with complicated rules. The role of quality tax software is to act as your expert guide, asking the right questions and performing the complex calculations to ensure you receive every credit and deduction you deserve. In our next chapter, we will address how to handle some of life's more challenging financial situations, such as receiving unemployment income, paying significant medical expenses, or starting to receive Social Security benefits. Thank you for listening. Hello and welcome back. Life doesn't always follow a simple path. Sometimes we face challenges like a period of job loss or significant health issues. As we get older, our income sources also change, with Social Security becoming a key part of our financial picture. These situations are often stressful on their own, and they bring unique tax rules that can be confusing. In this chapter, we'll demystify 3 of these tougher tax situations: reporting unemployment income, deducting large medical expenses, and understanding when Social Security benefits are taxable. We'll focus on how the right software is essential for handling these moments with accuracy and confidence. First, our vital disclaimer. This content is for informational and educational purposes only. It is not a substitute for professional tax, financial, or medical advice. The rules discussed here are complex and depend entirely on your personal circumstances. Please consult with a qualified professional for guidance. Let's begin with unemployment income. If you received unemployment benefits during the year, it's critical to know that these benefits are considered taxable income by the IRS. Your state unemployment agency will send you a Form 1099-G, which shows the total amount of compensation you received. You must report this amount on your tax return. This can be a difficult surprise for many people who are already in a tough financial spot. When you first sign up for benefits, you are typically given the option to have federal income tax withheld from your payments, usually at a flat 10% rate. If you chose not to have tax withheld, you will be responsible for paying the tax on those benefits when you file your return. This is a straightforward but easily missed part of tax filing. Any quality tax software, including most free versions, will explicitly ask you if you received unemployment income. It will then provide a clear section for you to enter the information from your Form 1099-G. The software ensures this income is added to your total income correctly, so your tax is calculated accurately. The software's role here is to prevent a simple oversight that could lead to an IRS notice and penalties. Next, let's discuss medical expense deductions. This is one of the most misunderstood deductions available. While the list of qualifying expenses is long, including everything from doctor visits and prescription drugs to hospital stays and dental care, the barrier to actually claiming the deduction is very high. You can only deduct the amount of your total unreimbursed medical expenses that exceeds 7.5% of your adjusted gross income, or AGI. For example, if your AGI is $60,000, the 7.5% threshold is $4,500. This means the first $4,500 of your medical expenses provides no tax benefit. You can only begin deducting the amount above that threshold. Additionally, this is an itemized deduction, so you must file a Schedule A, and your total itemized deductions must be greater than your standard deduction. Because of this high threshold, most people don't qualify. However, for those who have had a year with very high medical costs or a lower income, it can be a significant benefit. This is where good software is crucial. You'll need a deluxe or higher version that supports Schedule A. The software will allow you to enter all of your medical expenses, and it will then perform the 7.5% calculation for you automatically. It will then compare your total itemized deductions to your standard deduction, and choose whichever one gives you the better tax outcome. It takes a complicated and confusing calculation, and makes it simple and accurate. Finally, let's touch upon Social Security benefits. For many retirees, a common question is whether their Social Security income is taxable. The answer is, it depends. The IRS uses a formula based on what it calls your combined income. This is calculated by taking your adjusted gross income, adding any non-taxable interest you may have, and then adding 1/2 of your Social Security benefits for the year. If that combined income total is below a certain base amount for your filing status, your benefits are not taxed. If it's above a certain higher threshold, up to 85% of your benefits may be taxable. If your income falls between these two thresholds, up to 50% of your benefits may be taxable. This is not a simple calculation to do by hand. Thankfully, you don't have to. Every reputable tax software program will do this for you. You will enter the total Social Security benefits you received from your Form SSA 1099, along with all your other sources of income. The software will then perform the combined income calculation behind the scenes and automatically determine the correct taxable portion of your benefits. It's a perfect example of software handling a complex, formula-based rule to ensure your return is accurate. In our next chapter, we'll expand our focus from the federal return to look at the other half of the equation for most taxpayers: state income taxes. Thank you for listening. Hello and welcome back. Throughout this series, we've focused almost exclusively on the federal income tax system, administered by the IRS. But for most Americans, tax season is a two-part process. After you've dealt with Uncle Sam, you likely have to file a separate return for the state where you live. In this chapter, we're going to cover the second half of the equation: your state tax return. We'll discuss how modern software handles state filing, what you need to be aware of, and situations that can make state taxes particularly complex. First, let's begin with our important disclaimer. This content is for educational purposes only and should not be considered tax or legal advice. State tax laws vary dramatically and are highly specific. The information here is a general overview. Always consult with a qualified professional who is familiar with the laws of your specific state. The single most important thing to know is that tax software is designed to prepare your state return after you complete your federal return. This is the key to its efficiency. The software will automatically transfer dozens of key data points: your name, address, Social Security number, filing status, dependents, wages, and most importantly, your adjusted gross income, directly from your federal 1040 to your state forms. This integration saves a tremendous amount of time and prevents countless data entry errors. However, a state return is not just a copy of your federal one. After the data transfer, the software will begin a second, state-specific interview process. This is because every state has its own unique set of rules, tax brackets, deductions, and credits. For example, your state might offer a tax deduction for contributing to its 529 college savings plan, which doesn't exist on the federal return. Some states don't tax retirement income, while others do. The software's job is to ask you these state-specific questions to make sure your return is tailored to the laws where you live. Now let's talk about the cost. This is a crucial detail, especially for those using free filing services. While many companies heavily advertise free federal filing, the state return almost always costs extra. You might complete your entire federal return for free, but when the software transfers your data to the state return, you'll be prompted to pay a fee before you can file it. You should always budget for this separate state filing fee when choosing a software package. The complexity of state taxes increases significantly if you have ties to more than one state in a single tax year. This can happen for a few common reasons. If you moved from one state to another, you will likely need to file part-year resident returns in both your old and new states. If you live in one state but physically work in another, you will typically file a resident return in the state you live in, reporting all your income, and a non-resident return in the state you work in, reporting only the income earned there. Your home state will usually give you a credit for the taxes you paid to your work state to avoid double taxation. These multi-state situations are where tax software becomes absolutely essential. It can handle the complex task of allocating your income and calculating the credits between states. However, be aware that you will almost certainly have to pay a separate fee for each additional state return you need to file. Finally, it's worth noting that a handful of states don't have a broad state income tax at all. As of now, these states include places like Florida, Texas, Washington, and a few others. If you are a resident of one of these states, your work is done after you file your federal return, which is a significant simplification of your financial life. In summary, tax software turns the potentially difficult task of state filing into a manageable, guided process. It leverages your federal data to do the heavy lifting, but is smart enough to ask the specific questions needed to comply with local laws. In our next chapter, we'll discuss what happens after you've clicked File. We'll cover how to track your refund, options for paying taxes you owe, and what to do if you realize you've made a mistake. Thank you for listening. Hello and welcome back. If you've followed along, you have hopefully navigated the complexities of your federal and state returns and clicked the e-file button. Congratulations, the hardest part is over. But what happens next? The period after you file can bring its own set of questions, whether you're eagerly awaiting a refund, figuring out how to pay a balance due, or have the sinking feeling that you might have made a mistake. In this chapter, we'll cover the post-filing process, how to track your refund, your options for paying the IRS, and the simple process for amending a return if you need to. As always, we must begin with our important disclaimer. This content provides a general overview of IRS procedures and is for informational purposes only. It is not tax or financial advice. Your situation is unique, so please consult the IRS website for the most current information or speak with a qualified tax professional. Let's start with the most anticipated outcome, getting a refund. The fastest and most secure way to receive your refund is to e-file your return and choose to have your money sent via direct deposit to your bank account. Once your return is accepted, you can track its progress using the official IRS Where's My Refund? Tool available on the irs.gov website and their mobile app, IRS2Go. To use the tool, you will need 3 pieces of information from your tax return: your social security number, your filing status, and the exact refund amount in whole dollars. The system will then show you the status of your return in 3 stages: return received, refund approved, and refund sent. The tool is updated once every 24 hours, usually overnight, so there's no need to check it more than once a day. Now, what if you owe money? The most important rule is to file your return by the tax deadline, even if you can't pay the full amount. This helps you avoid the steep failure to file penalty. You have several secure and convenient options for paying your tax bill. The best method for most people is IRS Direct Pay. This is a free service on the IRS website that allows you to pay your tax bill directly from a checking or savings account. It's simple, secure, and you get immediate confirmation that your payment was submitted. You can also pay with a debit or credit card through third-party processors, but be aware that these services charge a processing fee. For those who cannot pay the full amount by the deadline, the IRS offers payment plans, such as short-term extensions and monthly installment agreements. You can find information and apply for these directly on the IRS website. Finally, what happens if you file your return and then receive another tax form in the mail, or realize you forgot to claim a valuable deduction? Don't panic. This is a common situation, and the IRS has a clear process for correcting it by filing an amended return. To do this, you use Form 1040-X, Amended U.S. Individual Income Tax Return. You should wait until your original return has been fully processed by the IRS before filing an amendment. On Form 1040-X, you will explain what changes you are making and why. This is another area where your tax software is incredibly helpful. Most quality tax software products have a dedicated function to help you amend a return. The software will use the data from your original, completed return as a starting point. It will then ask you what you need to change and guide you through the process, automatically filling out Form 1040-X with the original figures, the changes, and the new corrected amounts. In recent years, the IRS has begun accepting e-filed amended returns, and your software will guide you on whether this is an option for you. Generally, you have 3 years from the date you filed your original return to file an amendment. Correcting a mistake shows you are making a good faith effort to be compliant, and is always the right thing to do. In our next chapter, we'll zoom out and talk about how to make next year even easier. We'll cover best practices for record keeping and how to stay organized all year long.
Disclaimer: this video is for informational and educational purposes only, and should not be considered professional legal, financial, or tax advice. I am not a certified public accountant, CPA, or a tax attorney. You should consult with a qualified professional for advice tailored to your individual situation. Tax laws are complex and subject to change. The creator of this video or the channel will not be held liable for any actions taken based on the information provided.
Thank you for listening. Hello and welcome back. If you followed along, you have hopefully navigated the complexities of your federal and state returns and clicked the e-file button. Congratulations, the hardest part is over. But what happens next? The period after you file can bring its own set of questions, whether you're eagerly awaiting a refund, figuring out how to pay a balance due, or have the sinking feeling that you might have made a mistake. In this chapter, we'll cover the post-filing process, how to track your refund, your options for paying the IRS, and the simple process for amending a return if you need to. As always, we must begin with our important disclaimer. This content provides a general overview of IRS procedures and is for informational purposes only. It is not tax or financial advice. Your situation is unique, so please consult the IRS website for the most current information or speak with a qualified tax professional. Let's start with the most anticipated outcome, getting a refund. The fastest and most secure way to receive your refund is to e-file your return and choose to have your money sent via direct deposit to your bank account. Once your return is accepted, you can track its progress using the official IRS Where's My Refund? Tool available on the irs.gov website and their mobile app, IRS2Go. To use the tool, you will need 3 pieces of information from your tax return: your social security number, your filing status, and the exact refund amount in whole dollars. The system will then show you the status of your return in 3 stages: return received, refund approved, and refund sent. The tool is updated once every 24 hours, usually overnight, so there's no need to check it more than once a day. Now, what if you owe money? The most important rule is to file your return by the tax deadline, even if you can't pay the full amount. This helps you avoid the steep failure to file penalty. You have several secure and convenient options for paying your tax bill. The best method for most people is IRS Direct Pay. This is a free service on the IRS website that allows you to pay your tax bill directly from a checking or savings account. It's simple, secure, and you get immediate confirmation that your payment was submitted. You can also pay with a debit or credit card through third-party processors, but be aware that these services charge a processing fee. For those who cannot pay the full amount by the deadline, the IRS offers payment plans, such as short-term extensions and monthly installment agreements. You can find information and apply for these directly on the IRS website. Finally, what happens if you file your return and then receive another tax form in the mail, or realize you forgot to claim a valuable deduction? Don't panic. This is a common situation, and the IRS has a clear process for correcting it by filing an amended return. To do this, you use Form 1040-X, Amended U.S. Individual Income Tax Return. You should wait until your original return has been fully processed by the IRS before filing an amendment. On Form 1040-X, you will explain what changes you are making and why. This is another area where your tax software is incredibly helpful. Most quality tax software products have a dedicated function to help you amend a return. The software will use the data from your original, completed return as a starting point. It will then ask you what you need to change and guide you through the process, automatically filling out Form 1040-X with the original figures, the changes, and the new corrected amounts. In recent years, the IRS has begun accepting e-filed amended returns, and your software will guide you on whether this is an option for you. Generally, you have 3 years from the date you filed your original return to file an amendment. Correcting a mistake shows you are making a good faith effort to be compliant, and is always the right thing to do. In our next chapter, we'll zoom out and talk about how to make next year even easier. We'll cover best practices for record keeping and how to stay organized all year long. Thank you for listening. Hello and welcome back. For many people, tax season is a frantic 2-week scramble in April to find documents, recall expenses, and make sense of an entire year's worth of financial activity. But it doesn't have to be that way. The single best way to reduce tax time stress is to stop thinking of it as a season and start thinking of it as a year-round cycle of simple habits. In this chapter, we'll provide actionable tips on how to stay organized throughout the year. Adopting these practices will not only make filing your return infinitely easier, but will also ensure you don't miss out on valuable deductions. As always, we begin with our disclaimer. This content provides general organizational tips and is for informational purposes only. It is not financial or tax advice. The best organizational system is one that you can stick with consistently. The first and most important step is to create a dedicated system for all tax-related documents. This doesn't have to be complicated. It can be a simple physical accordion file, a labeled box, or a specific folder on your computer's desktop. The critical part is the habit. The moment you receive a document that could be relevant to your taxes, it goes into that one dedicated spot. Whether it's a receipt from a charitable donation, a property tax bill, or a Form 1099 from your bank, it immediately goes into the tax file. This single habit prevents the last-minute hunt for missing papers. Consider creating a digital version of this by using your phone to scan and save receipts to a dedicated cloud folder as soon as you get them. The next step is knowing what to keep. Your system is only as good as the information you put in it. Throughout the year, you should be collecting documents related to income, such as pay stubs and records of freelance payments. You should also be saving proof for potential deductions and credits. This includes receipts for charitable contributions, records of significant medical expenses, your Form 1098 for mortgage interest, and Form 1098-T for tuition payments. For business owners and freelancers, this is even more critical. You need to save receipts for all your business expenses, software, supplies, travel, and maintain a detailed log of your business mileage. Third, leverage technology. As we mentioned in the chapter for freelancers, many premium tax software packages now include year-round features, often through a mobile app. These apps can help you track expenses, digitize receipts, and even track your business mileage automatically. Using these tools throughout the year feeds your data directly into the system, meaning much of your return is already pre-filled by the time you sit down to file. Finally, a powerful habit for any W-2 employee is to perform a mid-year paycheck checkup. Sometime in the summer, take a look at your financial situation. Did you get married? Change jobs? Start a side hustle? These events can significantly change your total tax liability. If you don't adjust the amount of tax being withheld from your paychecks, you could be in for a surprise. If you withhold too little, you'll face a large bill and potentially a penalty. If you withhold too much, you're essentially giving the government an interest-free loan that you won't get back until the following year. The IRS has a free, safe, and anonymous tool on its website called the Tax Withholding Estimator. You can input your income and life circumstances, and it will recommend whether you should adjust your withholding. If a change is needed, the tool will help you fill out a new Form W-4 to give to your employer. This simple mid-year checkup puts you in control of your tax outcome. By creating a system, knowing what to keep, using technology, and doing a mid-year checkup, you transform tax preparation from a stressful annual event into a simple, ongoing process. You'll be more organized, more confident, and better prepared to file an accurate and complete return. In our next chapter, we'll discuss a critical topic in our digital age: how to protect yourself from tax scams and identity theft. Thank you for listening. Hello and welcome back. Over the last 13 chapters, we have explored every angle of do-it-yourself tax software. These programs are incredibly powerful tools that enable millions of Americans to file their taxes accurately and confidently every year. But even the best tool has its limits. There comes a point where a person's financial life becomes so complex that the wisest and safest choice is to seek out a human expert. In this chapter, we'll discuss the alternative to doing it yourself. How to know when it's time to hire a tax professional, what kind of expert to look for, and how to choose the right one. As we discuss professional services, our disclaimer is especially important. This content is for informational purposes only, and is not providing a recommendation for any specific professional service. The decision to hire a professional is a personal one based on your unique circumstances and comfort level. So, what are the signs that you might be outgrowing DIY software? Let's call them complexity triggers. If your tax situation includes any of the following, you should seriously consider hiring a professional. First, you own multiple businesses or rental properties. While top-tier software can handle a single Schedule C or Schedule E, managing the income, expenses, and especially the complex depreciation rules for multiple entities can become overwhelming. Second, you have complex investment activities. This goes beyond simple stock trades. It includes things like exercising employee stock options, trading in commodities or futures, or dealing with significant cryptocurrency gains and losses across many platforms. Third, you've had major life events with legal or financial complications. This could include a divorce involving complex asset division, receiving a sizable inheritance, setting up a trust, or dealing with the tax return of a deceased family member. Fourth, you have a multi-state tax situation that goes beyond simply moving. For example, you are a remote worker for an out-of-state company, or you own and operate a business in more than one state. These scenarios require a deep understanding of state-specific tax laws. And finally, if you have any foreign income or assets to report, or if you receive a notice from the IRS that you are being audited, you should stop immediately and seek professional representation. Beyond these technical triggers, there's also the confidence factor. Even if the software can technically handle your return, if you feel stressed, anxious, and completely unsure if you are doing things correctly, the peace of mind that a professional provides can be worth every penny. Think of it as an investment in your time and your ability to sleep at night. If you decide to seek help, you'll find there are different types of tax professionals. The three main credentialed experts are certified public accountants, CPAs, enrolled agents, EAs, and tax attorneys. A CPA is licensed by their state and has broad financial expertise. An enrolled agent is licensed directly by the IRS and specializes exclusively in taxation. A tax attorney is a lawyer who specializes in complex tax law and is best for legal disputes. For most complex tax preparation needs, either a CPA who specializes in taxes or an enrolled agent is an excellent choice. When choosing a professional, always check their credentials. You can verify them with the appropriate state or federal boards. Ask about their experience with situations like yours, clarify their fees up front, and make sure they have a preparer tax identification number, or PTIN, and will sign your return as the preparer. In the end, the goal is to file a timely, accurate, and complete tax return. For many, software is the perfect tool for the job. But as your financial life grows, graduating to a trusted professional is a sign of financial wisdom. In our final chapter, we will summarize our entire journey and leave you with a clear path forward to confident tax filing. Thank you for listening. Hello and welcome back. In our digital age, our personal and financial information is more valuable than ever, and tax season is a prime time for criminals to try and steal it. Choosing the right software is important, but it's equally important to be vigilant and practice safe habits to protect yourself from scams and identity theft. In this chapter, we'll cover the most common red flags to watch for, provide simple tips to secure your data, and explain what to do if you suspect you've become a victim. First, and critically, our disclaimer. This content provides general information on security best practices and is not legal or cybersecurity advice. Scams are constantly evolving. For the most up-to-date information, always consult official sources like the IRS.gov and the Federal Trade Commission, or FTC.gov. The first step in protecting yourself is knowing how the IRS does, and more importantly, does not, do business. The IRS's primary method of initial contact is through physical mail delivered by the U.S. Postal Service. This is a critical fact to remember. The IRS will never initiate contact with you by email, text message, or social media to request personal or financial information. If you receive an unsolicited email that looks like it's from the IRS, do not click any links and do not open any attachments. It is a phishing scam. Similarly, be extremely wary of threatening phone calls. Scammers will often call pretending to be from the IRS, using aggressive and intimidating language. They will threaten you with arrest, deportation, or driver's license revocation if you don't make an immediate payment. They often demand payment via unusual methods like gift cards, wire transfers, or cryptocurrency. This is a 100% guaranteed sign of a scam. The IRS will not demand immediate payment over the phone, nor will they threaten you with immediate arrest by local police. If you get a call like this, just hang up. When you are ready to file your return, practice good digital hygiene. First, ensure the computer you are using has up-to-date security software and a firewall. Second, when you are using online tax software, always connect through a secure, password-protected Wi-Fi network. Never, ever file your taxes from a public Wi-Fi network, like at a coffee shop or an airport, as these are easily monitored by criminals. Finally, use a strong, unique password for your tax software account. Now, what is tax-related identity theft? This is when a criminal uses your stolen social security number to file a fraudulent tax return in your name and directs the refund to their own bank account. Often, the victim doesn't find out until they try to file their legitimate return, and it gets rejected because one has already been filed. If this happens to you, or you suspect you are a victim, you must act quickly. The IRS has a dedicated process for this. You will need to file an IRS Form 14039, Identity Theft Affidavit, to alert them to the situation. You should also report the identity theft to the Federal Trade Commission at ftc.gov. For proactive protection, the IRS offers a powerful tool called the Identity Protection PIN, or IP PIN. This is a 6-digit number, known only to you and the IRS, that adds an extra layer of security. Anyone with a social security number can voluntarily opt into the IP PIN program through the IRS website. Once you have an IP PIN, your tax return cannot be e-filed without it, which stops a thief in their tracks. A new IP PIN is generated for you each year. By knowing the red flags, practicing safe digital habits, and using official tools like the IP PIN, you can significantly reduce your risk and file with greater peace of mind. In our next chapter, we'll discuss the alternative to doing it yourself. How to know when it's time to hire a tax professional. Thank you for listening. Hello, and welcome back for our final chapter. Over the last 14 episodes, we have taken a comprehensive journey through the world of tax preparation in the United States. We've moved from the foundational question of understanding your own financial life all the way through the post-filing process and beyond. If you have followed along, you have invested in your own financial literacy, and you are now better equipped to face tax season not with dread, but with a plan. In this concluding chapter, we will distill everything we've learned into a few core principles that will serve as your guide for every tax season to come. And for one last time, let us state our most important message. This series has been for informational and educational purposes only. It is not a substitute for qualified, professional tax, legal, or financial advice. Tax laws change, and your personal situation is unique. Our goal was to empower you to understand your options and the tools available, so you can make informed decisions in consultation with the appropriate experts. The first and most important principle is to know yourself. The entire process of choosing the right software hinges on a clear and honest assessment of your own tax complexity. Are you a W-2 employee who can take the standard deduction? Are you a homeowner who itemizes? Are you a freelancer, a business owner, or an investor? Answering this question honestly is the first and most critical step. It narrows your focus and ensures you don't pay for features you don't need, or worse, choose a tool that can't handle your situation. Second, remember to choose the right tool for the job. The decision between free and paid software isn't just about saving money, it's about capability. The value of a paid software product is found in its ability to handle specific forms, provide clear guidance on complex topics like investments or business expenses, and import data to save you time and prevent errors. Your goal is to find the software that is the perfect match for the complexity level you identified in step 1. Third, embrace the idea that organization is freedom. Tax time is only stressful if you try to cram a year's worth of financial activity into a single weekend. By creating a simple, dedicated system for your tax documents, tracking your expenses as they happen, and doing a mid-year checkup on your tax withholding, you transform tax preparation from a source of anxiety into a calm, administrative task. Finally, know that you have two excellent paths to confident filing. For the vast majority of Americans, modern DIY tax software is a powerful, accurate, and cost-effective tool. It can guide you through the entire process and help you file a complete and accurate return. But as your financial life grows, it is a sign of wisdom, not defeat, to recognize when it's time to hire a professional. A qualified CPA or enrolled agent provides a level of expertise and peace of mind that no software can replace. Our goal for this entire series was to demystify the tax filing process. We hope we have replaced any uncertainty you may have felt with a clear understanding of the steps, tools, and choices available to you. You are now in control. You have a roadmap. You are ready to choose your tools, prepare your documents, and file with confidence. Thank you for listening.
Disclaimer. This video is for informational and educational purposes only and should not be considered professional legal, financial, or tax advice. I am not a certified public accountant, CPA, or a tax attorney. You should consult with a qualified professional for advice tailored to your individual situation. Tax laws are complex and subject to change. The creator of this video or the channel will not be held liable for any actions taken based on the information provided.